Dr. Adam Back, the CEO and co-founder of Blockstream, a pioneer in Bitcoin Layer 2 tech and Bitcoin infrastructure. And of course, alongside him, we have Paolo Ardoino, the CTO of Bitfinex Securities, the CEO of Tether, who has played a crucial role, I think, in financial innovation kind of broadly, and also in bringing cryptocurrency more into the traditional financial framework. Today, the topic of discussion is tokenized securities and how that fits into institutional Bitcoin adoption. Throughout the conversation, we'll be collecting questions from the audience, I think simultaneously from LinkedIn, YouTube, and Twitter. So see how that works. And so be sure also to submit your questions. At the end of the conversation, we're going to have a Q&A section where we'll have Adam and Paolo address the questions that are brought up during the conversation. So Adam, Paolo, thank you very much for joining the first episode of Bitcoin Capital.
Thank you for having us.
Of course. Maybe starting with Adam, we could address some of the terms in security tokenization first, some of the definitions. So there's a trend of dematerialization in securities. It's been playing out for several decades already, the transition from physical to electronic securities. And now virtually all securities globally are digital. So how would you define tokenized securities? And do you make a distinction between tokenized and digital securities?
Yeah, well, I mean, as you said, most share certificates are electronic, and you don't generally see them. But if you had some shares on a brokerage, and you signed up for a new brokerage, and you wanted to transfer them, you would do that, and there would be a digital transfer these days. Going back some years, you could actually get, they would send you paper certificates and things like that, right? So it's definitely digital, but it's still, there's a lot of counterparties involved. It's, T+2 or something, which means, they don't really settle until a couple of days later. And there's a committee of people that have to kind of decide the edge cases when something goes wrong, and things do go wrong. And of course, all those companies and intermediaries are all adding fees, so it gets a little expensive, right? And so you can see that kind of go wrong, I guess, with GameStop, if people were paying attention to that, where there are a lot of retail traders trying to trade, and they basically got frozen out from trading because the brokerage they were using ran out of kind of capital, and they had to have some kind of capital coverage for the trading, and it's just reflecting the fact that it's not real time, and it's got to be settled later, and something could go wrong. So then tokenized is the more kind of Bitcoin-like approach, where you have an actual kind of cryptocurrency token, except in this case it represents a share, and other examples of tokens would be stablecoins like Tether. So you can have something like that, and then typically there will be some mechanism to deal with the fact that a security has regulations around it, and so it's not, it's not as permissionless as transferring a Bitcoin, for example, or even a stablecoin.
Yeah. Paolo, how do you describe tokenized securities, and how do you kind of gauge their importance and potential?
So first, I find tokenized securities as the actual natural evolution of blockchain usage. Apart from Bitcoin, I think that there might be some few other interesting projects that were developed through in the blockchain industry, but unfortunately, as we all know, in the last many years, too many tokens were born, too many useless tokens were born, and the actual importance of this new transport layer for information and for representation of wealth has been, kept in a cage almost, because people focus more on creating yet another token, yet another financial opportunity, yet another speculation opportunity. So the reason why I really love tokenized securities and digital assets is that it really changed the game, and the updates in almost one single go the entire technological stack that was almost frozen for 40 years. For 40 years, finance, trading has been relying on the very same transport layer for information, same settlement layer for securities, and so many banks are still using COBOL. So many banks are still using really clunky rubber band kept together infrastructures. And so I think that the beauty of blockchain, in a sense, is going to completely erase that technical debt and bring into fruition what should have been something that the financial world should have researched so many years ago, as soon as Bitcoin came to light. And that's why we are also big supporters of Blockstream's liquid network, because it's actually the most advanced transport layer for digital assets and tokenized securities, because offer privacy, as you would expect from any sale of Apple stocks, right? So you would expect in a certain precondition prerequisites, and that I think with the development of Blockstream in that area, I think we can say that it's the most modern solution to bring digital assets, tokenized securities, tokenized bonds, stocks, funds, shares of funds into 2024.
Yeah, and for this technological upgrade you're describing for global capital markets, what do you think are the main advantages for issuers of securities, of tokenized securities?
So, first of all, the ability of using or speaking one single language. So, the ability of providing transparency, the ability of doing faster settlements, right? The problem is that with not only financial institutions used a technological layer outdated of so many decades, but also everyone speaks a different language, right? So everyone has different type of databases, everyone has different type of APIs, and so you have to do a lot of paperwork in order to move, still manual paperwork to move something from, or a representation of a security, because securities are already digital, right? So but they are living on centralized databases that are all different databases, speaking different languages, different APIs, different technologies. And so every time you have to move from one database to another, there is a lot of balance checks and a lot of errors that can happen between the different institutions. So if you instead are starting to use a common distribution layer, a common settlement layer that is cryptographically sound, that have the proving that you cannot double spend Apple shares, and should ring a bell, right? These are all problems solved by Bitcoin. Then you suddenly get an infinite boost in the ability of trading faster stocks, moving much faster, and reducing the cost of settlement for institutions, making it more transparent, resilient. And that is, you get all the benefits of Bitcoin, but for everything else. And I think it should be super exciting for financial institutions.
Yeah. Adam, what do you think of the advantages are for issuers for tokenized securities versus issuing traditional securities?
Well, I mean, it's, I think the traditional finance rails are, as I said, have a lot of intermediaries, but they can also be quite expensive to do certain types of issuances, right? So, and that is because there are sort of moats, large financial institutions that have a high cost base and, a sort of stream of intermediaries that are all taking a piece of the fees to set it up. And so that can potentially put fundraising, make it impractical for smaller or medium-sized companies. So I think one of the promises of tokenization, now, there's still regulatory work, and it would conform to regulations in some jurisdiction, and that jurisdiction's securities laws will be accessible outside of that. then at that point you have a kind of longer tail and more access to capital. So I guess people who trade Bitcoin are, maybe that's the first thing they've traded, right? They haven't traded stocks, but in sort of economic theory and the current wealth and productivity of the world is significantly influenced by capital formation. So actually the ability for companies of different sizes to raise capital, to share the risk with their investors, and to give investors investor rights is a quite important part of the modern world. And what enables us to buy all the products we can buy at competitive prices and have those products developed.
So that's kind of like the advantages for issuers and maybe for, at the systemic level for the economy. What do you think the advantages are for the actual investors into tokenized securities? Because I think there's quite a few advantages there as well.
Yeah, I mean, I think one thing is you've got sort of real-time transfer, and so you don't have a delay. The actual mechanism for traditional finance, and Paolo dropped a hint about this, is that effectively all the brokers can sell, naked sell, right? It's not, there's no centralized system, there's no mechanism to check if you actually have the security you're trying to sell in the conventional world, right? Whereas inheriting from Bitcoin's technology base, layer 2 like Liquid, it won't let you sell something that you don't have. And so also with the blockchain, you have the possibility for smart contracts or like simple things. So in Liquid, you have the ability to do a trustless limit order that can be executed by, it could be OTC or it could be on an order book, but it's non-custodial and it can be sort of approved, signed by a hardware wallet. So these kinds of things are really a game changer. And once people are signed up and eligible to trade in or receive a given type of security, it starts to feel more permissionless, right? You could send somebody 1/100th of a share to pay for lunch or in cash in person. You could do these trustless limit orders, and the other point is sort of interoperability between systems. So there are different systems that work with this. So if you're trading let's say some BMN security token on the Bitfinex Securities platform, and you want to take it off and put it into your wallet, you can do that, and then you can sort of trade that on SideSwap or deposit it onto Merge. So it gives you a kind of interoperable self-service standard where you can take sort of in wallet custody, or you can transfer between platforms. And that's that's something born from the Bitcoin innovation, right? That people expect to be able to take Bitcoin out of one exchange, deposit it in another. And of course you can do that with traditional securities, but it'll probably take a week or two and fill in some paper forms, and it's quite complicated and slow. Whereas here it's a matter of minutes basically, which changes a lot of things.
And even like with the BMN, to trade securities in a Telegram chat or peer-to-peer and within a compliant whitelisted ecosystem, I think is something that makes Wall Street people's heads spin. That's revolutionary on its own. I think it gives people a lot more control of their assets. Paulo, from an institutional investor perspective, what do you think? What are some of the benefits do you think Bitfinex Securities has brought to institutional investors through tokenized securities?
So I think the most important part of investors when it comes to investing in securities is the fact that, first of all, usually you don't have access to. It's really hard to have access to newborn opportunities. Usually banks and other intermediaries have first access to those. Also having full transparency of the process, right? There are so many intermediaries usually when it comes to, if you're a company, you have to raise capital, you have to go through so many different intermediaries. You have to go, you need a distribution network, you need and by the way, all these intermediaries are adding to the cost of the issuer to to just perform the issuance. And so instead of costing few basis points or maybe half of percent, might cost 4 or 5% to the issuer, even if not more, to issue debt or to anyway tokenize stocks and so on. So there is always a cost, an enormous cost for the issuer in trying to apply to go public in a way, in both raising debt, listing their shares and so on. So I think adding or tokenizing shares is a new way of and is basically bringing the Bitcoin philosophy in a way to also traditional finance. You would remove intermediaries because in the end, it's just the issuer, is the regulator, and is the platform that would be Bitfinex Securities, and of course the blockchain like transport layer that would be Blockstream Liquid. So you have a really transparent set of players. Again, you have 4. So yourself as an issuer, you have the transport layer, so the technological layer, so the blockchain, and then the platform. So and then basically you have the regulator. So everything is really well spec'd out. Now, as an investor, you can easily start to understand how the issuance, the prospectus is being released. You can see the process on the review of you can understand really easily the process of review of the prospect, because it's just one step between the issuer and the regulator and the listing platform, so Bitfinex Securities. So as an investor, you get more transparency. You get more. You have full visibility on all the issued tokens, because they are represented on a technological layer that is being battle tested with the billions of dollars in it, and billions and billions of dollars in volume in transactions. You can also know that eventually you will have access to incredible liquidity, right? For small companies, it's always hard to find good liquidity in secondary markets. So instead, if you are on a more open, transparent platform like Bitfinex Securities, you will have access to enormous user base that can vary from other institutions and also retail user base that can also participate to the sale or purchase of the tokenized assets. So again, if you look at the usual markets in traditional markets for small cap companies, they barely trade. Yeah. And we are seeing similar struggles really openly on at the beginning with the Bitfinex Securities, but I believe that is the future is extremely bright, because now that we open also El Salvador as a new jurisdiction, we are getting more and more interest and more excitement. Unfortunately, we are still at the stage where people that trade or look at crypto exchanges are still a little bit bound to, where I will find there the next dog coin. But the reality is that more and more people are registering to this new type of offerings because they are exciting. They're a new thing. They're something that is related to the real world. And that there is I don't believe there is any future in dog coins and stuff like that. And more and more investors that also made a fortune in Bitcoin, and there are the classic usual whales on Bitfinex are looking more and more at offerings on Bitfinex Securities, just because it's basically a paradigm shift for both the cryptocurrency world and for the traditional financial world.
Yeah, I think those are some really good points there, especially on the liquidity. I mean, one thing I would point out on the liquidity on Bitfinex Securities at the moment is our 2 offerings that we have. It's early days for the platform. The 2 offerings that we have are accredited only so naturally there's a bit thinner liquidity there, but I think that's part of the reason why everyone's so excited for El Salvador, and to see what happens when we can get kind of a broader range of investors to participate in some of these issuances. So can you talk about, the issuances that we have on the platform right now? I think maybe we can leave the Blockstream mining note for Adam to go through, but can you talk about Alt 2612? I think one of the first truly tokenized bonds in the market globally, and then maybe talk about some of the interest we've seen in El Salvador in the pipeline, just maybe generally in terms of asset classes like across debt and equity and the types of things that people are looking to tokenize.
So I think it's the micro capital offering is quite interesting for multiple reasons. As you said, is probably the first tokenized bond of its kind. Second, it has an important social impact because it actually does micro lending, and so we know in how important is micro lending in emerging markets and developing countries, and also allows the usage of stable coins in those areas, and also empowers people in borrowing lending through stable coins. So that is not only, of course, stable coins, so both traditional fiat money and stable coins. And I think the beauty is that it tries to really, in the micro lending space, that is a hugely growing and a space both for importance and for significance for the market, but also for society. I really believe that is one of the most interesting offerings that we could have at the beginning. And the team, I know that our team has worked really, really hard with their team to ensure that there were adequate disclosures with the regulator. I think was a great test for the issuer, for us as a platform, for the technological layers, for transport layers, so liquid. So I think I welcome on Bitfinex Securities more of these issuances and more of these projects, because again, I don't want on Bitfinex Securities, well, everything is fine, right? So it's important that all the different, that the offerings are diverse. But I think I find much more interesting to see offerings that have social impact in the real world. Could be, on the agricultural side, on the industrial side, on companies that are seeking capital to expand their operations, maybe in El Salvador or in Central and South America. So those are things that, in my opinion, are going to take a lot of traction in the next months and years. And I think that this is much more exciting to me, at least as a person, rather than raising a bond for financing the next blockchain.
Yeah, definitely. Adam, maybe the same question to you. Can you talk about some of Blockstream's key offerings? I think the Blockstream mining note was really the flagship product in this space, right? I think it's one of the first truly tokenized securities, and was able to do an issuance in size almost $50 million raised over 8 tranches. And you've gone into some other offerings as well. I know the basic note. Can you talk about some of the stuff that you've issued and what you're looking to issue in the future, and what's kind of in your pipeline and what you're thinking about?
Yeah, so the BMN, the Blockstream mining notes, is a 3-year term product that started like 2.5 years ago, roughly.
Time flies, doesn't it?
Yeah, so it's coming up for maturity this summer, basically, and each unit is 2 petahash, and it mines Bitcoin for the holder, minus some administrative expenses, audit, accounting, that kind of thing, right? And for people interested in security mechanics, the top level structure is a Luxembourg securitization vehicle, which is a very popular kind of sort of financial product interface in the traditional finance world. It has some advantages which you'd need to talk to a more kind of finance lawyer to understand, but basically it's extremely widely used, and I think it gives a lot of flexibility and assurances to the investor. And this is sort of, it's a security in the sense that that's what it's defined as, but it's not shares in a company, right? It's a defined hash rate, so it's something interesting to Bitcoiners who might want to participate in mining, and because it's securitized, they can then buy and sell it, whereas most hash rate contracts are a fixed term, or you buy a machine and you find a hosting situation and you can't typically resell it, where these are sort of standardized. So even though they were issued in 8 tranches, all the units are interchangeable. And an interesting aside of how we managed to make that work, which is that so tranche 1, that was actually launched 3 months before it started mining, right? The first tranche. And then after it started mining, there was another tranche and then another tranche. And so let's look at a tranche that starts 6 months into the mining, and then the existing units have got some number of Bitcoin that they've already mined. And so what we would do is we'd match, a new investor would get a 2.5-year contract instead of a 3-year contract, and then from their purchase price we would buy the right amount of Bitcoin to sort of fill in the Bitcoin they would have mined if they'd been there from the beginning. And as a result, it's it's not dilutive or anti-dilutive, and they're interchangeable, even though people bought them for different prices and starting at different times. It's kind of got the effect like a zero coupon bond, where you can have sort of interchangeable things that are issued at different times. And I think that because of some sort of side effects of securities regulations, the unit is quite large, like it's 200,000 or 300,000 euro kind of lump. But after it was issued in a primary, then people could trade it down to 0.01, so 1/100th, so a few $1,000s or euros. And of course that goes lower when you're on a Bitfinex Securities platform, because on a securities platform you've got people doing arbitrage, and they need to be able to buy in a few dollars tick sizes or something for that to be efficient. So that's what happens there. So it's pretty nice, and there's interest from the users to have another tranche. I mean, to see another series. And I think one thing that surprised us about that one is we were expecting people who were not already in Bitcoin to see it as a way to accumulate a Bitcoin position with some kind of discounted dollar cost average. And I guess because of the reach of the companies involved, actually most people bought it with Bitcoin. But nevertheless, it seems to have worked out pretty well. And 7 of the 8 tranches are in profit in Bitcoin terms with its current trading price. The other thing we saw is that Bitcoin investors are holders. So some people were trading it, but a lot of people were holding for maturity. Yeah, and we have some more products. Like the basic you mentioned is kind of a sort of an opportunistic situation to buy excess mining inventory, say ASICs or miners, new in box, shrink wrapped from the manufacturer. There's a lot of excess at the moment because of the market conditions the last couple of years. People bought with long lead times. The miners arrived and they didn't have anywhere to power them up. And so for various reasons, the manufacturers have excess inventory. Some lenders ended up with excess inventory. Some prop miners ended up with excess inventory. And so the price of those is, I think, considered to be below the build cost of, the manufacturing cost of more units. And so there's a kind of opportunity to buy those, which provides liquidity to people that, need to sell them to fund operations or so on, and sell them back into the market when that excess inventory is absorbed. And, if you look at the history of Bitcoin ASIC price versus Bitcoin price, actually there's a bigger swing in ASIC price. So there's a potential for a kind of Bitcoin basis upside. So that's another you know, as I mentioned, with the BMN, we found that it was Bitcoiners who bought it. So this one is actually designed for Bitcoiners. So it has a kind of hedge fund carry formula, but it's using Bitcoin basis. So in other words, if you put a Bitcoin in and it doesn't do so well and it returns a Bitcoin out, there'll be no fee. But if you put a Bitcoin in and you get 2 Bitcoin out, that's a stellar result. If it achieves that, then there's a carry on that, so a percentage of that and the fees. So that one, there's one tranche of that released, and there's another one in sort of primary at the moment where people can go to Stocker, which is a startup on Liquid that does securities regulation and manages Luxembourg securitization vehicles and things like that. And then there are some other ones which are kind of US dollar basis return, so a bit like the micro lending, but with a different use of capital. So kind of more. So there's a fund called Aquarius, which is actually issued and managed by Stocker as well, and in that case, they're the issuer, and that seeks to return a US dollar basis return using secured lending and margin lending and things like that.
Great. Yeah, I was going to ask you about jurisdictions, but I think you covered it on why you like Luxembourg. So for Paolo, Bitfinex Securities is licensed in the AIFC, which is a financial center like Dubai, like the DIFC, Astana International Financial Center in Kazakhstan, and also El Salvador. And I think sometimes when I'm speaking to investors or issuers, those 2 jurisdictions kind of people raise an eyebrow. It's not exactly the first jurisdictions that most people think of when they think of global capital markets. What do you think is the appeal of these 2 locations for Bitfinex Securities versus more traditional financial centers like London, New York, Tokyo?
Well, so I'm trying to find a way to be polite. So here's the thing, right? So El Salvador and Kazakhstan are investing a lot to front run this huge interest, the huge interest that inevitably there will be in tokenized assets. I mean, there is really no doubt, right? You see big companies like Citi also thinking about building tokenizing frameworks and technological tokenizing stack. So when you look at El Salvador, for example, that is an agile country that was the first one to adopt Bitcoin as a legal tender, is one that from the political side have made huge steps to ensure the security of the country, has made many, many different reforms when it comes to their licensing regimes, to modernize their financial industry, although small. And so it's in a great, great direction. Unfortunately, when I look at London and maybe Frankfurt or other jurisdictions around the world, they are in a declining trajectory, right? They were great in the 80s, 90s, first 2000, then something happened with 2008, and they won't, they did it, right? So so that is one of the reasons why they are in a declining trajectory. And so honestly, I think that when we look at the best jurisdictions where to start devoting resources, both from the licensing point of view, but also focusing on tokenization, we as the Bitcoin industry, we should recognize the jurisdictions that are doing more for and are believing more in this industry, in the Bitcoin industry, and they have the highest chances also to lead the way in when it comes to the digital assets and tokenized securities. It's obvious that small countries are more agile. Kazakhstan has this Astana financial area that you have hub that allows you to get a license. You have you are in an incubation phase at the beginning, and so it's an extremely serious process. Unfortunately, there is some there are some people in the traditional financial industry that are a little bit obnoxious, and when they are looking at some countries that they cannot point on the map, they get scared. But that is basic geography, and it doesn't take out anything from the seriousness, from the efforts and the importance that of what both El Salvador and Kazakhstan are doing to be at the forefront of this innovation.
Shifting gears a little bit to talk about the liquid network. Adam, what are some of the practices and technologies that Blockstream has developed specifically around the liquid network to issue assets in a compliant way, and also, to adhere to different regulatory regimes in different locations?
Right. So we developed this kind of standard, which is, it's not technically part of the blockchain. It's a kind of higher level feature, which is called Blockstream AMP. And what that does is it allows issuers to sort of whitelist participants as authorized, or having signed up to be able to trade a given security, and maybe all securities issued by a given issuer in a jurisdiction will be whitelisted at the same time. It really depends, right? And now, how that's reflected in the blockchain is very efficient and simple, which is that to the liquid blockchain, which is an extension to the Bitcoin blockchain, it's a sidechain, it looks like a multi-sig. So that means there is no kind of in-chain state reflecting the whitelisted status. There's no identity information in the blockchain. Blockchain's about financial settlement, and it's all using the Bitcoin UTXO model, right? So there's no kind of account-based thing going on, and that's how blockchains, I would say, are designed or should be designed. And so what happens in the background is that if you sign up, there's a kind of wallet ID that gets linked, and then when you transact, there's a server that looks to see if you're whitelisted and cosigns if that's the case. So it's extremely simple, and it has some flexibility because the people writing this kind of back-end server can customize it to make more sophisticated rules if necessary. Sometimes there are restrictions on the percentage ownership of a share by one entity, or things, it's fancy things like that, right? But generally it's just that you're whitelisted. But once you are whitelisted, it's interesting because you can transact it in the same way as you can transact Bitcoin to somebody who's also whitelisted. And it enables a kind of open innovation, which is very interesting. So it's a fascinating combination of, things which are not really quite permissionless because there are restrictions on, which jurisdictions they could be traded in, potentially the investor qualification, and sometimes it's an accredited investor. But once you're set up, a third-party software developer can implement some new innovation, and that's exactly what happened with Sideswap. They came out of nowhere. We didn't know anything about it until we saw the first release, and it's a way to trustlessly OTC trade and actually to participate in an order book with no custody for Bitcoin versus Tether, but also Bitcoin versus BMN or any other security in a liquid format.
Okay, I've got a bunch more questions, but as usual, it looks like we don't have enough time. So I'm going to skip to the last one because this is an interesting one. So everybody's been talking about the Bitcoin ETF. It's obviously having a massive impact on price. Everyone likes to see the number go up. Do you think there's any downside? And it seems like we're entering this new institutional phase of interest in Bitcoin and, I think probably more broadly, Bitcoin-based capital markets and tokenized securities. These ETFs are adding a ton of Bitcoin every day. I think in total they hold ex-GBTC something like 300,000. They've bought like 6 billion in 21 trading days. I think that equals out to something close to 10,000 Bitcoin a day. So at that pace, somewhere around the second half, BlackRock and Fidelity and the others are going to manage more Bitcoin than Satoshi. Is there a risk to Wall Street holding so much Bitcoin, do you think? Adam?
I mean, it's something that people are concerned about, and a kind of preview of where that could become relevant is the forks that appeared in the market. You know, the different Bitcoin forks around a kind of hard fork debate a few years ago, and at that time, different exchanges tried to grapple with, you know, how should they define it? Because if that happens, the traders on their platform would sort of get a stock split, right? You know, they'd get the original Bitcoin and they get some spin-off coin. And there's a kind of definitional question. Well, if it splits in two, which one is the Bitcoin? Which is Bitcoin, which is the new thing, right? And so they sort of grappled with it. Some exchanges wrote some policy about, you know, hash rate or their discretion or what have you. Now, I think the ecosystem learned quite a lot from that, you know, preview of that happening. So I think it'll be much tidier this time. But the ETFs have, you know, tried to say something about how they would handle a fork if another one were to happen in the future. And so I think people's worry is that if a very large amount of Bitcoin ends up in ETFs, and the ETF fund manager, you know, has a view or feels he's obliged to take a certain view, that may conflict with what, you know, Bitcoin investors want, and so that would become a kind of economic force in the network. Now, I mean, ultimately, I think those forks were resolved by the market, so maybe that comes to the same thing. And, you know, I think the positive aspect of the ETFs is it improves accessibility to a different audience. So people who want to, I mean, I certainly have, you know, some extended contacts over the years who've bugged me like year on year, you know, how do I buy Bitcoin? My broker can't do it yet, right? And it's like, it's probably a decade since the first of those conversations. And of course, now he can't, now this fellow can actually call his broker, and he did, right? You know, he put some Bitcoin into his retirement savings plan or something. So I think the accessibility is quite valuable. And it's, of course, it does a number of things, right? It simplifies tax reporting. Reporting taxes for Bitcoin trading is quite complicated because it's not automated, whereas the securities in a brokerage account, you get an automated report, right? So you don't have to spend money on an accountant to figure out just the basics, like what happened, right? They do it for you. And then you've also got the inheritance planning, right? So for some people, managing private keys is, you know, it's complicated and a barrier to entry. So I think, you know, there's always a possibility for people to graduate as well, right? To buy some in this form, then do some more research and buy some in physical form as well.
Great. All right, maybe we should jump into the audience questions. I see there's one here for Paolo that kind of lines up as a nice segue, I think, from what Adam was just talking about. The question is from NextBridge, and they ask, how do you foresee traditional finance adapting to incorporate Bitcoin and other cryptos into their portfolios? What challenges do you anticipate for this institutional adoption?
So that's definitely a good question. So we are going to see for sure a wide range of hedge funds and I think pension funds that will start to add Bitcoin to their portfolio. Now that the Bitcoin ETF is out, there is no doubt that that is something, I mean, it's something that we are hearing a lot, right? There is, you know, throughout all our channels, we know more and more fund managers interested in starting to add, you know, 1, 2, 3 to up to 5% of their portfolio into Bitcoin. But ultimately, I think one of the most interesting things is companies more and more will start keeping part of their unused balance sheet and maybe the cash balance that they were keeping all in T-bills now that interest rates are so high. They are thinking to keep a part of it in Bitcoin, right? Because now with the ETF, they had the legitimization that they needed, right? Before was really hard to go to their accountant or to, you know, their auditor and tell them, look, I want really to keep a little bit of Bitcoin in my balance sheet. Can I do that? And the auditor would say, well, but maybe it's not. It's too early. It's too difficult. But now there are not excuses anymore. Now every company can start adding just a little bit, right, of Bitcoin to their balance sheet, and I think that will grow over time, because after the first year, you will see that it was great. Of course, there was volatility, but then more and more companies will realize that Bitcoin is the perfect hedge against all the craziness that can happen in the world. The point of companies compared to tokens is that companies have real life problems and need to survive to all the difficulties of our world, right? Companies are not living in the metaverse. So since I believe that, and many are seeing that there is a lot of unrest in the world, from political unrest, social unrest, and so on. It will make more and more sense for companies to get exposure to Bitcoin, just for, what if, right? What if something happens?
Yeah, it might just make sense to get some, right? I think that was Cathie Wood's thesis too for her Bitcoin target price in the last cycle, 2020 or 2021. She said, what if publicly listed companies, if there's more micro capitals and they put like 5% of balance sheet into Bitcoin, and she had the $500,000 target price, which I think was calculated on the back of that. Adam, next question's for you. I know this is something that you've discussed for years. Bitcoin mortgages. This is from Malva Digital. Bitcoin mortgages, will we see them soon?
Well, I hope so. It's I think there are, if anybody's tried to get a mortgage who has something non-traditional about their kind of employment situation, like they're a digital nomad, or they're a consultant, or they work remote, it's extremely difficult to get a mortgage, actually, because mortgage companies are very, very conservative and formulaic, and they typically only lend in their home country because the rules are different. And so, for people who are, don't have a pay slip and a history of employment in the last 12 months or something, they basically are persona non grata, and they can't get a mortgage effectively. And so, one formula that could improve that. Now, the simple thing that people think about is, like they could borrow some money against Bitcoin, but I would say that is like, it's a form of leverage, and it's potentially quite high risk, right, because of the volatility. But an alternative is that you buy the property, and the property itself is the primary collateral, and then the Bitcoin is just there to sort of supplement or potentially be the sort of payment guarantee. So what the mortgage company wants to know is that you're going to pay the interest payments, right? And so one way to assure that is to put some Bitcoin in escrow that won't be touched unless you somehow stop paying interest payments. So that's an interesting formula. And people have also talked about kind of equity release things, or buying some Bitcoin as part of the purchase even, right? Now, many years ago in the UK, they used to have 90% mortgages and even 110% mortgages, and the 110 was here's some extra money above the purchase above the value of the house, so it's immediately underwater, so that you could do some renovations or buy something, right? Which in today's world, that's considered crazy risky. But if the thing that you bought with the extra capital was Bitcoin, and it went into the collateral pool plus the house as the kind of standby collateral, it might allow an individual to do something a bit like what MicroStrategy does, which is to have a long-term low-risk loan that isn't, that is a form of leverage, but is not liquidatable. That's a kind of superpower in a way, right? If you have some low leverage on Bitcoin in a way that can't get liquidated and doesn't doesn't put the house at risk either, right? Generally, mortgage companies don't want to repossess houses because then they have to sell them, and that could realize a loss for them. So generally speaking, as long as people keep paying the mortgage payments, they're happy to let it ride. So that's a kind of feature.
Great. So we've got a couple questions here from different people, I think asking about total addressable market. So one of the questions is, do you have an estimate of how much capital can flow in from institutions? And another question is, what is the total addressable market for tokenized RWA on the Liquid protocol? Which I think means, what is the total tokenized market for STOs, real world assets, and then what is Liquid protocol's position within that? So I think both of them are talking about how big is this opportunity for tokenized securities, and how much money do you think we could see come in from institutional investors?
Well,
it's hard to put a number on it. A lot.
Yeah. I mean, we saw one. I mean, you have the micro lending, which is an interesting form of capital formation, right? And in the Liquid network, there's a company called Mifil who provided promissory notes lending to individuals and small businesses in Mexico. Now, the actual capital, we can't disclose the backers, but they're large US financial institutions, public market companies. And that has placed hundreds of millions into the Mexican market. I've got the data offhand, but the average loan size may be in the order of $50,000 or something. But it's placed a lot of money, and it's sort of solving a demand, right? Which is, it improved a kind of workflow situation, because a promissory note is effectively a business loan, which is, assured by some paperwork and potentially resellable. Somebody could transfer the loan. And previous to the introduction of this Liquid workflow, it was a paperwork nightmare, basically, right? So they kind of skipped to the digital world and had securitized promissory notes. So quite an interesting development, and puts money in market.
What do you think, Paolo? Do you want to try and put any numbers on those, the market or the inflows from institutional?
Sorry, Adolfo just messaged me, who was the business development lead that worked with Mifil at Blockstream, and he says it's crossed $1 billion deployed now.
Right?
Yeah, it was originally 200, but it's grown pretty quickly. It's very popular. The people who are providing the capital have a lot of capital, and there's a demand for small businesses, and this is a more efficient process.
Well, tell them to get their act together and do an issuance on Bitfinex Securities. We've been waiting for them.
Yeah.
So from my point of view, is definitely hard to put a number on it, but this new wave of tokenized securities in this moment have access to a new type of customer that usually traditional financial industry didn't have access to, or at least was not that easy or not that straightforward. And that would be the cryptocurrency crowd, right? So now on Bitfinex Securities, you can have access to a type of trader that not necessarily was investing in bonds or equities through their bank accounts or in a traditional manner. So now the Bitcoin surpassed $1 trillion in market cap, and if you sum the entire crypto industry, is around 2 trillion or something. And so that is a new market, that is wealth that has been accrued, and that could in part be directed to the tokenized securities market. And so this is just short term, because eventually more and more this industry will grow. The interesting aspect that I think about Bitfinex Securities and what Bitfinex Securities created is an example that people will start expecting a more streamlined access to securities compared to what they have now in the banking industry. A nicer interface, a better interface, an interface that is more user-friendly. Right now, if you go on many banks, the interface looks like still being in the late 90s. And so the more that will happen, the more disintermediation there will be, and the more capital will flow in a small and mid-size tokenized securities. So I think what we are doing today is just opening the path, paving the way to an enormous growth that is in the trillions of dollars in size.
Yeah, I agree. The opportunity is massive. When you add up global public equity, private equity, real estate, everything, it's just such a massive number. Maybe to wrap things up, the last question about governments and policymakers. How should world governments and policymakers see the crypto sector, which I think includes tokenized securities, now that it's transforming the nature of traditional money and I think traditional markets as well? So how do you think the attitude from policymakers and regulators is going to change over the next 5 or 10 years?
I think in general will be a catch-up thing. Because as soon as they will start seeing that countries like El Salvador and Kazakhstan are going to start attracting a lot of wealth, the regulators eventually will have to catch up. It's exactly like the Bitcoin ETF story. First, they were mocking anyone that was talking about even the remote possibility of a Bitcoin ETF. But eventually, when it came reality, suddenly everyone wanted to jump on the Bitcoin bandwagon and start to launch an ETF. So eventually, this will happen also for countries that will see capital flowing outside of their jurisdiction. And so, in order to try to prevent that or protect the capital, protect also the banks that are custodying that such capital, they have to do something about it, and they will be forced to innovate and to follow the innovation.
That's great. Yeah, I think that's so true that the consensus view is finally starting to come in our direction, which I think is a great thing. So I think that's all the time we have today. I really appreciate both Adam and Paolo joining us today for this conversation. And I do want to say that this is the beginning of a series, so we'll be doing more conversations like this going forward. If you're interested in these topics, please follow us on Twitter at Blockstream, follow Bitfinex Securities at BFX Securities, and be sure to sign up for Bitfinex Securities. We have a lot of exciting things coming in the pipeline that we'll be announcing over the next couple of weeks and months. So thank you very much, Paolo and Adam, for doing this tonight.
Thank you.
Thanks, guys.
Thank you, everyone.